We'll talk autos, and Jinesh Gandhi, Deputy Head of Research and Auto Analyst with the institutional business of Motilal Oswal Security, joins us now. Jinesh, good morning. Thank you for joining us. It's turning out to be one of those years where the auto trends are slightly mixed. The two-wheeler sales are recovering in bits and pieces, but within the auto space, SUVs are the clear winner.
Right, Nikunj. Good morning. So clearly, the growth recovery post-COVID has been mixed bag across auto OEM segments. As you rightly pointed out, SUVs and passenger vehicle in general have seen a good recovery. Commercial vehicles have seen a good recovery, whereas two-wheelers had been late to the party with respect to recovery is concerned. But clearly, post FY22 and FY23, we have already seen recovery from the low base. Obviously, the base has been so low. I mean, we have more than decade low in terms of the base for two-wheelers is concerned. But on that low base, we are now seeing a reasonable recovery playing out in the last 9 months. So broadly speaking, all the segments are back on recovery path. Even tractors have been doing very well. FY23 is a new high for the industry. CVs, we will be crossing new peak in FY24. PVs, we are already at new peak. And two-wheelers are just starting off with the recovery process.
What amazes me is that if I look at tractors, like you said, they are at a multi-month high. Again, in representation of the rural income and rural economy. But if I look at two-wheelers, and especially numbers from a company like Hero MotoCorp, they are showing me signs of rural distress. So tractors बिक रहा है और scooter नहीं बिक रहा है. How amazing is that?
So clearly that dichotomy is reflection of nothing but the end application. Tractor is a commercial use for commercial activity, whereas two-wheeler is more for personal use. So keeping good monsoons in mind, good agri economics in mind, tractors have been doing well. Whereas on the other side, the two-wheeler has much wider audience, not just the farmers as such. And given the impact of COVID, given the substantial increase in two-wheeler prices since in last 5 years by almost 40%, that customer is just emerging out of the sticker shock which two-wheelers had seen in last 5 years, along with the impact of COVID on income and at a personal level. So I think that is where the difference has been between tractors and two-wheelers so far. Hopefully, the recovery which we are seeing in two-wheelers, and if prices of two-wheelers remain stable after last 5 years of hyperinflation, we should see a sustained recovery on a low base. We still believe the penetration is quite low for two-wheelers, and that leaves enough headroom for two-wheelers to grow at a consistent pace over a longer period of time.
Jinesh, but what happens to auto margins across the board? Because commodity prices from their, Q3 lows are once again inching up higher. So does that dent margins across the board, you think?
So clearly, the tailwind which we had of commodity prices over the last 2 quarters is now slowly stabilizing, and there are initial signs of commodity prices going up, partly in reflection of China opening up. From the lows of 3Q, commodity prices, which matters for autos, is up between 5 to 10%. Almost all commodities are up except aluminium. The increase so far has been quite manageable. Unlike last 2 years where we had seen a substantial hyperinflation in a very short span of time, which made it difficult for the auto OEMs to pass on those cost inflation to customers. The current increase has been fairly manageable. If it sees similar inflation like we saw in last 2 years, clearly that will turn into a material headwind for the sector, particularly from the margins, which are still well below the historical averages, which we have seen over last 10 years, over last 5 years, margins are still well below that. So if commodity prices remain where they are today on the spot basis, driven by operating leverage mix and favorable currency, and particularly for exporters, we should see margins improving in FY24 and 25. Mind you, we are still not expecting margins to go back to the normal level even in FY25. So any amount of hyperinflation in commodities will be clearly a negative for the sector.
Jinesh, tell me, in your last note, you made a very interesting point where while highlighting how the weight of the auto sector has declined over the recent years, going forward, you expect that to rise. Tell me, which stocks do you think are going to lead this recovery?
So clearly, if you see the stocks which have been impacted because of these cyclical issues, primarily on the large cap side, we have seen M&M, which initially got impacted and seen a spectacular run over last 2 years or so. We do believe that will continue to do well, particularly given their strong SUV order book. But more importantly, stocks like Tata Motors, Ashok Leyland, where we are seeing a good cyclical recovery in India, particularly for on the commercial vehicle side and passenger vehicle side for Tata Motors. And JLR is at right at the bottom. And as supply side improves, Tata Motors should also see a good recovery driven by JLR. Not to mention the recent announcement for IPO of Tata Technologies that will add to the SOTP value between 25 to 45 rupees a share. That could be near-term trigger for Tata Motors as a stock. Similarly, Ashok Leyland, as I said, the stock has been consolidating for last few months at current level. Business has been improving at a very fast pace. Market share recovery has been strong. Margins are just recovering. So that's another stock which we like on the OEM side.
But tell me, when you talk about Tata Motors, you think it's JLR or the domestic business which is going to aid the recovery?
So the large part of delta from here will be by JLR. The India business has been doing well. We expect that to continue to improve, but the key driver will be JLR.
JLR will improve. I mean, they're still struggling with chip shortages. What I also understand is that there is no large product pipeline, at least for JLR portfolio per se. And every time when there's a new product pipeline, the customer migrates from old to new. So why should JLR turn around when world is in a mess?
So clearly, the macro headwinds which you're referring to are is clearly the area to be monitored. But as things stand, JLR has three major products, primarily Range Rover Sport and Defender, which have been recently fully upgraded. That in turn is resulting in very strong order book in just three markets, which represent 60% of the volumes. They have order book of 215,000 units, just of which 75% comes from these three recently upgraded models. Demand continues to remain strong. They have been accreting to their order book on quarter basis. And the chip supply, which has been the big drag on performance, is slowly improving. 3Q FY23 was a quarter of new high in terms of production. Post chip shortages were there. Fourth quarter should do better on 3Q, and gradually things are improving on the chip supply side as well. While we are nowhere near to normalcy, from the weak period of last 12 months, things are slowly falling back in place. That supported with a very strong mix, along with the operating leverage benefit, we will see substantial improvement in JLR's P&L as well as balance sheet. In fact, we expect JLR's net debt to reduce from close to £4 billion as of December 22 to little over £1 billion by March 25, led by improving supplies, better mix, and in turn improving margins.
If the subsidiary of Tata Motors, which is Tata Tech, if it goes public later this year, what could be the impact of that?
So currently, we are not giving any value to Tata Technologies as a part of our SOTP. That business is a strong business focused on ER&D space. Based on the valuations at which that subsidiaries expected to come up with IPO, along with the valuations which are traded in the unlisted market, we estimate per share value of about 25 to 45 rupees a share for Tata Motors after 20% holdco discount. So that could be a good near-term re-rating catalyst for Tata Motors as a stock.
Right. Okay. Jinesh, great to have you on the show today. Thank you so much for taking the time out.
Pleasure.